So in Edmonton, cap rates have remained and continue to tread fairly steady overall, year over year and even quarter over quarter. There hasn't been many big or institutional transactions that have happened in our market, which has kept cap rates fairly steady over the last few quarters, or again, year over year. When you look at the different asset classes, looking at retail continues to be the flavor of the investor sentiment. Cap rates in retail remain fairly steady, around that 6 to 6.25% return. Again, not a lot of major transactions, but our office was successful in procuring in the last quarter a major sale in Sherwood Park, the peripheral of Edmonton, for the sale of Heritage Hills Crossing, which transacted at about 5.5% cap, a little bit lower than what the average or the market stimulates the return to be. So we were pleasantly happy with that transaction. On the other side, on industrial, again, steady course on cap rates. You're looking at about a 6.5 to 6.75, but sub 7 on that return investment. Not a lot of activity in that market. There is a flavor for that multi-tenant industrial product, but again, lack of inventory is driving that cap rate to be steady or even trending lower. On the office side, it's exciting times in office, again, with the downtown development. What you're seeing is the largest shift in cap rates on the office side because of positive absorption in increasing rents and that downtown development. So where you saw 7% or north of 7% returns on the expected return on office product, you're starting to see sub 7% or 6.5% returns on the capitalization rates of the office product. Again, not a lot of major transactions happening, so steady course for cap rates. And we forecast that into the future as well with the political environment and the new election coming up in the end of this year. We're seeing that until we see more transaction volume happening, cap rates to remain fairly steady moving into the future. In 2018, we saw a few increases in interest rates in the Bank of Canada's prime lending rate because of the slowdown in the Canadian economy, which still sees some positive growth. There has been almost a curtailment in that increase in interest rates, which provides a good lending environment for owner users at the moment, which is why you're seeing that interest and that activity and that spur in transaction volume on the owner user side. On the investment side, although the lending environment is strong at the moment, the political landscape is yet to be determined with the new federal election coming up. So you're seeing a lot of that investor confidence sitting on the sidelines with capital to be placed, but a little bit of a wait and see period to see what's happening with the federal election.